Zillow was all over the news this past week after they announced that they are going to stop flipping houses. They've got 7,000 homes that they currently need to unload, and they're in the process of laying off 25% of their staff. This wreaked havoc on Zillow's stock price, with it being down around 36% last week alone, and it has a lot of people wondering what the future holds for this real estate marketplace company. Competitors like Redfin and OfferPad show no signs of slowing down their iBuying business model, so we can't help but wonder, where did Zillow go wrong? In today's video, we are going to talk about this massive move in Zillow's business model, how it will impact the company moving forward, and what this news means for regular consumers like you and I. And for anybody who's new to my channel, my name is Scott. I'm a real estate developer myself out of Arizona, so here on my channel we cover all things real estate. Click subscribe down below if you're into that kind of thing, because I'm posting new videos every week. Now, to understand how Zillow ended up here today, we need to rewind the clock about 3 years to when Zillow first entered the iBuying business. If you've never heard of iBuying before, it's just the process where these massive companies like Zillow buy homes, usually fix them up a little bit, and then sell them, hopefully for a profit. Zillow called this leg of their business Zillow Offers, which in theory was a decent business model because you would think that Zillow, of all people, would understand how to value a home properly. It was a nice situation for people who were looking to sell their houses to Zillow because it was very clean, cut and dry, compared to having to go the traditional method where you work with a real estate agent and you need to stage your house and all of that. Zillow got into this game in 2018, and they used their almighty algorithm to determine which houses would be good ones to buy, fix, and then flip. The CEO, Richard Barton, at the time wanted to turn this into a big stream of revenue for the company because he reportedly had a goal to buy 5,000 homes per month by 2024. By Q3 of 2021, Zillow was actually buying about 3,000 homes per month, so when they decided to exit the iBuying business, they actually weren't all that far away from Barton's initial goal. As a house flipper myself, I feel like any company who's doing this iBuying thing is out of their minds. See, a robot or a remote person who's working in some corporate warehouse is not going to be able to pick up on a house that has a funky floor plan or small bedrooms or low ceilings, or even worse, something like structural damage. These people also aren't going to be able to pick up on some things that are big issues for buyers when you're looking to sell your house. Like, for example, if you have a house that's sitting on a busy street or that's backing up to a commercial building. Take this place here in my region, for example, that is listed for sale for $189,000. At first glance, homes like this might look like a great deal because they're surrounded by other homes that are priced way higher at $500,000 or $600,000. But one big issue with this home is that it backs right up to a very busy street. Zillow's algorithms are going to pick up on this house thinking at first glance that it's a great deal because they'll be looking at the comps in the surrounding area and assuming that they could potentially sell that house for $500,000 or $600,000 themselves, and that's what's getting them in trouble. They've been overpaying for houses for years, which means they've been destined to lose money when they sell. Another unique part of the market that we're working in nowadays is that the cost of construction, both labor and materials, has gone up a ton over the past 18 months. I know I used to be able to buy a house around here and we would put about $40,000 in total into the place, and that was for a gut remodel where we did a complete overhaul. Well, nowadays that same remodel is going to cost about 3 times the amount because labor and materials have just gone up that much. I mean, you name it. Look at tile, lumber, metal, appliances. The price of all the materials has gone up, and labor is almost even worse because it's almost impossible to find skilled contractors nowadays who have the time to be able to start on your job right away. So if Zillow bought a house and they thought that they would be able to do a little lipstick remodel and put like $20,000 into the place and be done within a month, newsflash Zillow, that remodel is probably going to cost you about $30,000, and it's probably going to take you like 3 months to get it done. Whether you're an individual or a big company like Zillow, if you just out of the blue decide that you're going to get into the house flipping business and you start buying thousands of houses per month, you're just setting yourself up for disaster. I advise anybody who's thinking about getting into the house flipping business to just do 1 or 2 per year for the first couple of years, just so they can kind of get their bearings on the process and the pricing and all of that. But Zillow, of course, takes an extremely aggressive approach, and they decide to start buying a bunch of homes remotely, sight unseen, and in a huge volume. And if you think about it, Zillow actually single-handedly exaggerated the issues that we were facing last year because they entered the market when there was already a supply and a labor shortage, but they amplified that problem by buying thousands of homes per month each of which required more labor and more supplies. No, I'm not going to sit here and bash Zillow the entire video because hindsight is always 2020, and I'm sure when all the executives were sitting around a table in 2018, it probably seemed like a great idea on paper. Plus, nobody could have forecasted what happened in 2020 when it comes to both the construction and the housing market as a whole, but their balance sheet and workforce is definitely feeling the weight of their mistake now, that's for sure. The timeline of events from when Zillow realized they're in trouble until now can be summed up like this. We established that in 2018, Zillow started up their iBuying house flipping business model, and they've been ramping up their home buying ever since. Zillow went on a home buying frenzy through 2019, and presumably at that time they did okay. Then through 2020, they continued their home buying, which may have been a lot of what contributed to the stability of the market that we all saw throughout the pandemic. In October of 2021, though, Zillow announced that they would halt their home buying program through the end of the year due to a labor and supply constrained economy. It turns out that Zillow has been feeling the same pressure that all of us who have been trying to get work done on our house have been feeling. So Zillow announced all this bad news this past week. They have been pretty transparent about them getting themselves into a situation that they didn't expect and into a hole that they have been having a hard time digging themselves out of. The CEO, Richard Barton, who started this program, said in a statement to shareholders last week that we've determined the unpredictability in forecasting home prices far exceeds what we anticipated, and continuing to scale Zillow offers would result in too much earnings and balance sheet volatility. He also went on in the same statement to announce the employee impact, where he said the wind down is expected to take several quarters and will include a reduction of Zillow's workforce by approximately 25%. The most difficult part of this decision is that it will impact many of our colleagues. This report gives a ton of information for both employees and for shareholders, but this paragraph sums up the financial mess that they found themselves in, where he reports, included in the company's third quarter financial results is a write-down of inventory of approximately $304 million within the home segment as a result of purchasing homes in Q3 at higher prices than the company's current estimates of future selling prices. The company further expects an additional $240 million to $265 million of losses to be recognized in Q4, primarily on homes it expects to purchase in Q4. So in summary, as Zillow reports to their shareholders that they stand to lose hundreds of millions of dollars as a result of this home buying process, the shareholders go on to panic sell the stock from a point of about $100 per share all the way down to $65 per share. If you're like me and you're wondering where you can get your hands on one of these 7,000 houses that Zillow is now selling for a loss, I've got bad news for you. Bloomberg says that the homes will be probably offloaded to institutional investors like BlackRock and not regular people like us. So no chance for us to capitalize on this fire sale of properties that they're going through right now, but cheers to you if you did sell your house to Zillow over the past couple of years and you made a big profit. If you enjoyed the video today, guys, if you could hit the thumbs up button down below here, that would really help me and my channel out a lot. And one more reminder to hit the subscribe button down below as well. That way you get a notification for my next video when it comes out here in a couple of days. But that's all I've got for you guys this time. So until next time, see ya.